All right, let's check in now with Brian Hoops, President, Senior Market Analyst, Midwest Market Solutions. And Brian, man, it's been a wild week, a wild ride in the markets once again. We had huge gains Monday, kind of quieted down after that, and then a little bit back and forth yesterday. Today looks like another one of those days where maybe start one way, end a different way.
Yeah, we've seen that in the case of the wheat, where prices were lower overnight and then they turned higher here going into our mid-session. The corn, soybeans staying on the negative side, and that comes despite some export sale announcements again this morning of 136,000 beans to China, 120,000 to an unknown. We may have additional export business maybe tomorrow, even Monday, of China demand. It was rumored on Monday they had bought about 500,000 tons of U.S. soybeans. Tuesday, same type of rumor that they bought an additional 5 to 10 cargoes. And then was confirmed yesterday and again this morning that they had in fact had been buying. So yeah, we're going to see maybe another day of some export business, but markets are really focused on the weather. It's 95% of our pricing influence right now. What is our weather telling us? Well, forecasts are very hot for the rest of this week and into next week, probably the hottest temperatures of the summer next week. But then it starts to go back to more of a normal pattern. Additional rainfall, cooler temperatures, and that is what's got the market attention, is that long-term forecast. So we'll have models come out, in the mornings and at midday, again in the evening, and all these model runs can change price direction. If they flip back to maybe a hotter and drier period extending past next week and into the following week, that would be, the 20th or so of July, we can start looking at a possibility that we're going to see another run up in prices, because that hot and dry conditions hurts corn during pollination, but it probably even hurts soybeans even more, because it is needing some more moisture as it goes into the pod filling stage. And we have, I think, a really strong demand base for both corn and soybeans right now.
Over into livestock, particularly the cattle market here, we've seen that market also kind of fluctuate back and forth a bit, even today.
Yeah, it's a little disappointing that even today we can't find more upside strength or momentum or anything after a decent rally yesterday. We started off a little stronger, and then all that buying momentum has kind of faded. Yesterday we had a real strong rally off of our lows, about a $3 rally off of our lows into our closing bell. And a little bit of follow through. Feeder cattle had an even bigger range, a huge outside day type reversal after trading lower and rallying back to close higher, almost a $10 range yesterday. It's just the fundamentals are holding us back in here. There was some talk about 248 cash trade in Texas yesterday. That's going to be down like $7 from last week's trade. So certainly we're braced for $3 to $5 losses, but 7 is a lot. Even though we're already discounting the futures to those cash, that's a big drop in the cash markets, and we haven't seen much in the way of strength or support coming out of the cutout values, as they have been trending lower this week as well, and that keeps packer margins deeply in the red. We're estimated about $336 in the red.